So on Monday, we actually did audit report. We went through to do the things, the issues on audit report. And today, we want to look at something that is also about communicating. And audit report is actually part of communicating. An audit report was governed by the ISA 700. We even went to 705. But still under reporting, you see, in audit reporting, we have a form of report that goes to the shareholders. So by default, we have some of the report that go specifically to the shareholders. We call that one the audit report. The audit report. And that is what we looked at on Monday. So all the issues from ISA 700, 701 through to 705 and all those stuff. We did that. It's the entire ISA 700 talks about all those things. Then we have a form of a communication that actually goes to those charged with governance. Those charged with governance. Now, when we say those charged with governance, who are they? We are referring to the board of directors. These are the people who are charged with governance. Now, the form of communication for these people is in the management letter. And on Monday, we mentioned management letter. And if you remember, I asked you to even distinguish between the management letter and the written representation. So one is from the auditor to the management or those charged with governance. And the other one is from those charged with governance to the auditor. So there is a difference between the two. Now, anytime you are communicating to those charged with governance, especially in the form of management letter, it is governed by ISA 260. All right, ISA 260. So we've actually dealt with how to do the audit reporting. And in the audit report, we concluded that the final part of the report, you put your date, you put your signature, and you, the person, the address, the person addresser, the one who is addressing somebody, that is the auditor, because normally you put your stamp there. All right. So that is what you do. So your signature date, the addresser thing, all right, is there. So now we are actually going to talk about communicating to those charged with governance. Communicating to those charged with governance. And in the intervention, it is something that we will be doing a lot. And I want you to get the understanding so that when we get there, you will see the difference between that and the audit report. So we are talking ISA 260. Now, if you remember, when we were doing the audit report deals with basically materiality. The things that actually go into the audit report are issues that are of material in nature. So if the thing is material, remember that thing we did. If the error is material but not pervasive, if the error is material and pervasive. So the word materiality is very predominant when you are doing an audit report. The issues that go into the audit report are material issues, like things that are material. All right, take note of that. Take note of that. However, if the thing is immaterial, does it mean we should ignore it? If the thing is immaterial, does it mean we should ignore it? We should not even communicate it. So, for example, you are an auditor, all right? When you were auditing the person, you realize that they've stolen let's say 400,000 Ghana cedis. Okay, they've stolen 400,000 Ghana cedis. Now, that 400,000 Ghana cedis they've stolen, per your materiality levels, the 400,000 Ghana cedi was immaterial. So because it is immaterial and the audit that you do centers on materiality, will you say you will not communicate it at all because the thing is immaterial? So that is what the whole issue is about. So if the thing is immaterial, you know, the audit report is all about materiality. Now, if the thing is immaterial, it doesn't mean you will not communicate it. You will still have to communicate it. But where you will communicate it to is the issue. And that is where ISA 260 comes in. So you are going to communicate it, but you are going to communicate it in the management letter. All right. So that is that. So the ISA 260, the objective of the ISA 260 is basically telling us that we should communicate to those who are charged with governance. All right. Especially those who are actually going to make sure that the external auditor is doing his work. The communication that goes into that letter, don't forget, this is a communication to those charged with governance. So the form of communications that should go into that letter, number one, is about how or the overview of the audit that the external auditor is going to do. So if you have to communicate to them, so you have to tell those charged with governance the overview of the auditor, the audit, sorry, that you are going to do, overview of the planned audit, because you need to tell them that, oh, we are coming to do the audit. We will do A, B, C, D. So the planned audit. So you need to tell them the scope, how you are going to do the audit. You need to tell them the timing. All right. It's very, very important. You need to tell them the resources you are coming to use to do the audit. And if you check these things that you'll be telling them, it is the things we said you do in the audit strategy if you saw it. So your audit strategy must be communicated to those charged with governance. So that is the first thing. That's the first thing. All right. So when you do this, of course, you will get from them the governance structure of the whole audit, the whole internal control things that is inside the organization. So you will tell them what you are going to do. You will tell them everything. All right. So, and please understand that when I say those charged with governance, I'm talking about those who are, it embodies two things. Let me clarify that, because sometimes we restrict it to only one set of people. I'll come to add something, all right? But I want to explain when we say those charged with governance, who are those people? When we say those charged with governance, like I said, we are talking about the board of directors. These are the people who are charged with governance. They look at the long term and everything of the company, everything, all right? Everything. But not only that, you also add management. Please, board of directors is not the same as management. I think by now, your corporate case study person should explain everything to you. All right. So that is that. So these are the people that you are communicating to. Every time an audit is done, they give these people a letter. All right. Now, in that letter, like I said, the plan thing about the audit will be communicated to them. Not only that, number two, the findings that they did, they are going to tell the auditor. The findings. They are going to tell the firms. So we are going to tell the firm significant findings, all right? Significant findings that they found. And that is where I will base everything off on my teaching today. Significant findings. Now, these significant findings are the immaterial things that never goes into the audit report. It's very, very important. So, because if you audited the thing and you found out that somebody has stolen 400,000, but the 400,000 is immaterial, and I've told you that the audit report deals with issues that are of material in nature. But the fact that the thing is immaterial doesn't mean you shouldn't be talking about it. You still have to talk about it. All right, you still have to talk about it. So those things will go into the management letter. We communicate those things into the management letter because the guy has stolen 400,000, but as far as our audit is concerned, it is immaterial. And so what we will do is that we will tell management that there are fraudulent things happening in your entity. And if you remember when we did ISA 250, we said you will communicate to management. This is where you are learning the proper communication to management. You are telling them from this point. So the things that were immaterial but worthy of communicating that didn't go into the audit report, that is that. Please, let me ask you a question. You know, we said that, what do you remember the bar for revenue, materiality bar for revenue, materiality bar for assets? Do you remember? Revenue, asset, net profit. Do you remember them? Anybody remembers it? The materiality, COSO materiality limit. Do you remember them? Revenue is what? I told you that these are things you memorize. Oh, I told you that. So it's not something by now you should be forgetting. I'm waiting. You have to give me that thing. You have to give it to me. Yes. If you don't give it to me, we are not moving forward. So be ready to give me that.
Same.
You said asset is what?
1 to 2%.
Revenue is what? The net asset is how much? 2 to 5.
Pardon?
You said asset is 1%. Revenue is
1 to 2%.
yeah, revenue
5
is
to 10%.
5 to 10%.
Yes.
So and you have to say it confidently, even though you are right, but I still needed you to say it confidently. So this one is 0.5%, and it goes with gross profit. Profit before tax is 5%. Profit after tax is 5%. Net asset is 2%. Total asset, this total asset is 1%. So these are the things. So it means that if the thing is in the range, so this one and above, this one and above, this one and above, then it is material. But the question is that what if there was a mistake is done in the asset, but it is 0.9%? It is not 1%. And please, when you are doing that thing, let me warn you, don't go and round things. Like this one, somebody will run it and make it 1%. Don't try that. You will put yourself into serious wahala if you try to do rounding. So please, nobody should do rounding in the exam. No, nobody should do that. So if it is like this, it means that the thing is not material. And so therefore, it will even come into our audit report. And like I said, those things that are not communicated in the audit report are communicated in the management letter, communication to those charged with what? Governance. So when you see the thing is immaterial, you will say that those ones will be reported in the management letter. Please, is that understood? Do you have that part? I said that if the thing is immaterial, it won't go into your audit report. It will go in the form of a management letter as a communication charge, as a communication to those charged with governance. I hope that is clear. Because we will be solving questions. So, and the questions that I've sent you, some of these things are in there. They are in there. So you have to be very, very careful. Audit, people sometimes make it like it is easy, but it is not that easy. Yeah, that is the thing. It is easy, but it is not that easy. It's like writing an accounting paper. There are certain principles you should know. Like this one that I've just told you, that if the thing is immaterial, it doesn't go into the audit report. It goes into the management letter, communication to those charged with governance. So this is what we are learning. So if the thing is immaterial, please don't force it into the audit report. Bring it into the management letter. That is a principle. If you listen, you can work with it. If not, then you'll be found wanting when you finish calculating your materiality in the exam hall. So you have to be careful and stick to, principles that is being communicated to you. All right, if you do that, you'll be fine. But if you decide to go other way around, that one there, it will affect you. I have to be frank with you on that. All right, so basically that is that. So when the thing is below the materiality level, it means that the financial statement is okay, it's true and fair. That's why we say the financial statement in all material respect is true and fair. We don't just say it's true and fair. The material statement the financial statement in all material respect. So materiality is the audit report. Immateriality is ISA 260 management letter. So please get the distinction clear, because on the week of the intervention, for those of you I have taught like this, it is a straightforward. We are going straight to answer questions. We are going straight, and I'm going to put my ears down to actually get you most likely exam question, not any question like that. I need most likely exam question, so for us to do. All right, so that is how it will be. All right, thank you. So basically, that is the part of the management letter. We use it to communicate immaterial but relevant thing. Because if the person is stealing money, you can't let it go like that. All right, you can't let it go like that. So that is the objective of the ISA. All right, that is the objective of the ISA. Okay, now let me ask you a question. We said that if there is an issue, communicate it to those charged with governance. But what if those charged with governance are part of the issue? Who will you communicate to? So, of course, the hierarchy of a company below is the management. Below, because we don't deal with staff. Then from management, you go to board of directors. From the board of directors, you go to the owners, who are the shareholders. From the owners, you go to the regulatory authority. So the regulatory authorities, those ones, is when the thing is getting dangerous. That is where you communicate to. All right. So, and this thing, we've done it before. So just be careful. The way you've not been learning online. You get it? What did that man say? You get it? If you don't get it, what do you do? If you don't get it, forget about it, right? Have you heard that thing before? The thing they do in social media that goes like, you get it? If you don't get it, forget about it. So you have to start getting it, all right? So I know you will learn.
About it.
Yeah, I know you will learn. I know, like somebody like Edna. I don't think Edna is in class. When I was leaving campus this evening, she was hot. They are the internal auditors for University of Ghana Business School. And you know this period, they are doing audit. So she was hot. I asked her, are you sure this thing it will work? So I'm taking my leave next 2 weeks. So it will work. Yeah. So you two, I believe that is where your hopes are, that you take your leave and you will do it. And if I've told you that if you know you won't be getting leave, start taking compulsory leave. You know the compulsory leave. I taught you compulsory leave, right? You don't know compulsory leave. Eh. Then I won't see me in chambers, pay some small amount. I'll teach you compulsory leave. Use that. You are giving us feedback. All right. Okay, so that is that. The last thing I want to talk about is you see, I'm building up on this to talk about this particular one, the issues here. I'm building up on it to delve more into it, to go and talk about communicating deficiencies to those charged with governance. And that is where I'll end the class. Communicating deficiencies of internal control. So if there is deficiency in internal control of the entity, how do you communicate that one to those charged with governance, which is the board of directors and the management? How do you communicate that? All right, because if there are deficiencies in the internal control, it affects the financial statement. So how do you communicate these deficiencies? And every time an audit is done, ladies and gentlemen, if you like, go and ask your MD, they get it. They always get it. They always get it. Now, in that letter, the auditor will spell out deficiencies in the internal control. So this one too, they use the management letter. We call it management letter of representation. And I'll give you a personal experience I encountered in one of the things, this communication of deficiencies and those communicating to those charged with governance. A personal experience that I have, it was marvelous. So the auditor will write the letter, and in that letter, the auditor will highlight the deficiencies in the internal control. In the internal control. We've learned internal control, and so you should have an idea about it. So he will highlight the deficiencies, all right, in the internal control. So what form of deficiencies? Inventory count is not properly done, asset repairs, the IR thing that we talked about, the issues there, the things about financial, operational, reputational, all those things that are happening, they come because the internal control system of the entity is weak. People go to work late because internal control system is weak. Yeah. So the auditor will highlight the deficiencies in the internal control. But not only that, after highlighting the deficiencies, he will mention the effect of those deficiencies. Effect of those deficiencies. So he will highlight the effects of the deficiencies. In level 2, this is something we examine the most. He will give you a case. We would want you to pick out the internal control deficiencies and the effect of the internal control deficiency. This one, at your level, we call it assessment. How does the deficiency affect the financial statement? What is the relationship between the deficiency and the financial statement? So that is that. Then the last thing the auditor will do is to recommend solutions. Recommend solutions. Recommend solutions. So basically that is that. So you have to identify the deficiencies, whether individual deficiencies or combined deficiency. You have to identify it, whether in aggregate or in singular. All right. So highlight it. And when we say the deficiency, so you have to describe it, highlight it, describe it to those charged with governance. Oh, the cash management system in your company is very weak, and so therefore there's somebody even stole 400,000. Even though this is immaterial, that shouldn't be in the audit report. It has affected your cash balance in the financial statement. We think that you should get a tail box. The finance manager should hold one of the key, and probably the risk management or the internal control manager should also hold one of the keys, just to do checks and balances. All right. So this is what goes into the the management representation. Sometimes the management letter of representation can be a standardized report, which anything that is standard actually affects innovation. It doesn't allow people to bring out innovations and things. All right. So this one we are talking about. So I've spoken about ISA 250 and ISA 265. This is ISA 265. So you are communicating. So ISA 260 and ISA 265 are all into the management letter. All right. So they are all communicated in the management letter. Please, the management letter I said is a letter from the auditor to the management, highlighting findings of internal control and other issues that they communicate to the management of the company. So, ladies and gentlemen, this is it.